In today's video, I'm going to discuss Canadian interest rate expectations as of October the 2nd when I'm filming this video. In today's video, we're going to go into what's known as BACs, which is the Bankers Acceptance Contracts that can be used to determine the probability of an interest rate increase or decrease. We're going to talk about what is the methodology behind it and what are the current probabilities that this is sharing with us. If you're new to my channel, my name is Koukun and I'm a real estate investor and I run a real estate team here in the Niagara region. If you're interested in learning more about what we do, check out the links in the description below. All right, let's get into it. Now, before we go into the probabilities that you see on the screen here, a banker's acceptance contract is one of the tools that a company can use to hedge their interest rate exposure, and traders take the other side of that equation and make a bet that interest rates are going to go up or rates are going to go down. So this sort of dual sides create a marketplace where you can see, based on where these are trading at, the price they're trading at, what is the market expecting in terms of interest rates in the next 3 months, 6 months, 9 months, 12 months. So there's up to 8 of these 3-month interval acceptance contracts. So that becomes the data that we see here. And based on where those price at, that implies a probability that based on what a trader is willing to accept, based on what a company is willing to accept, that is the market price. And you have to imagine that someone in interest rate trading or a company that has exposure to rising interest rates, they're going to do their research to come up with the best number they can. So that's going to be the Bank of Canada's press releases, that's going to be GDP data. There's so much data that go into interest rate expectations, but then they need to make a decision. They need to decide, okay, at this price, we're willing to let go of some of our interest rate exposure. All that being said, this is not a crystal ball. If you had looked at this, when interest rates first started rising, it would not have predicted how high interest rates have come. That was, far more than what the general consensus was. The importance of that word consensus is what this chart shows us. It gives us the current consensus of the market. It gives us what is the agreed upon general idea by companies, by traders, of what they expect rates to do in the next 2 years. So that is something important to keep in mind. Howard Marks, one of the greatest investors of all time, has said the consensus is mostly right most of the time. So simply knowing the consensus is not an information edge. Simply by looking at this chart, you don't gain an edge over every other investor. It is when the consensus is wrong and you are right, that is when there is money to be made, when it comes to investing in companies, in sort of interest rate instruments like this, or maybe even investing in real estate. So you can't make money off of this information, but I found it useful to at least have a grounding to know what is the consensus, and then to have a view, does that seem plausible, or do I feel I have an information edge based on something material where I can confidently say, no, it's not going to be the consensus, it's going to be higher or it's going to be lower instead. So that is the overall idea behind this interest rate expectations video. But yeah, we're looking at the consensus right now. So based on this consensus, between now and next June, there's anywhere from a 39% to a 65% probability that there will be a 1/4 point interest rate increase. And this has gone all over the place in the last couple of weeks. At one point it was like 100%, now it's come back down. So we'll have to see. The important thing to keep in mind from a real estate perspective, this shows basically from now until next June, there's almost no probability of a rate decrease. So if you're someone that's deciding, hey, I don't want to sell in the fall right now, I want to sell in the spring instead, there may not be any relief in terms of a booming real estate market in the spring based on these probabilities. If rates stay the same or go higher, there may be a few pauses which may help, but there isn't an interest rate cut, which is what would really spur the real estate market here. It does create a probability where there's a 50% chance in September of next year, so that's almost a year from now, that there may be a quarter point cut from today. So if it does go up a quarter point, then it may go down half a point. But again, 50% is not guaranteed. However, by December, it seems to almost be guaranteed. So when the bar goes to the level below it, it means that the bar above it is pretty much 100% chance. Based, again, probability. So it's not guaranteed, but based on the probability, it's 100% chance. So basically, in terms of using this to get any useful information, it's basically saying don't expect interest rate cuts to be anything significant next year. So 2024 is pretty much a write-off. It may even go up a quarter point from here. And the best case scenario right now is maybe a quarter point cut by the end of next year from today's rate. So maybe if it goes up a quarter, it may come down a half, but that is pretty much what the probabilities say. It is interesting to see that the further out you go, there seems to be a consensus that rates will drop a little bit more materially. So you can see here by December of 2025, above this 9% would be the 100% probability of a 1% interest rate decline. Again, that's by December 2025. That's 2 years from today. So it's not in the next 3 months, 6 months, it's 2 years from now. If this goes according to plan, realistically, the real estate market will probably heat up, given that there's, a good few cuts and people become more optimistic about real estate. But that being said, even after a 1% decline in the Bank of Canada rate, we're still looking at 5.5% to 6.5% mortgages, or maybe 5 to 6%. This is not low by any stretch of the imagination. And there may be a reckoning when people realize that potentially these rates are here to stay for the near to midterm. And, I think people are still having this expectation rates are going to go down, rates are going to go down. It's not sustainable based on these probabilities, at least in the next 2 years. What this chart is saying is that, rates are here to stay high and maybe come down 1%. And this is kind of, I think, a best case scenario. But anyways, that's what the information is sharing here. What I've taken away from it personally for my own investing is that I need to be realistic and, adjust based on this reality. Rates are high. Even after 2 years, rates may only go down 1%. There's not this material decline. So I have to look at my portfolio, my properties, my cash flow position, and really come to terms with, what can I keep for the long term based on this new reality. All of this can change on a dime if we go into some economic crisis, there's some banking collapse. This is completely within the power of the government, right? So they can decide, okay, there's a crisis, the economy is tanking, let's decrease interest rates. So that can always happen, but that is not priced into the probabilities right now. Obviously, they don't know that a crisis is going to happen. As soon as news of one comes, these probabilities will adjust. So at that point, we'll make an update video to this, or we'll make an update video after the end of the month when the next Bank of Canada interest rate announcement is going to happen, I believe, on October the 27th. So hope you found this video helpful. If you have any questions, feel free to comment down below. And let me know, how do you feel about the information in this chart? And do you have a strong view either to the upside or the downside that this will be inaccurate and instead it's going to be something else? I'm curious to hear your thoughts and your reasoning for it, and it'll be useful to know, this is the consensus, so what are some of the other potential options? If you're interested in discussing maybe your situation, if you own some rental properties, or if you're thinking of buying or selling, feel free to book a 15-minute call. I have the link in the description below. And until next time, all the best.